Hey guys, this is Ehab. Today we're going to talk about rental real estate and how you can benefit from all the tax deductions that are available for you. Now, there is a reason why rental real estate is very popular nowadays, that you own a property, rent it out, and you save a lot in taxes. The reason for that is that the tax law has so many benefits for you and to incentivize you to own a real estate or rent it out. Whether it's your principal residence that you own, there are some benefits to that, and we can talk about that in another time, that will basically make you not think twice to own a rental real estate, because there are so many benefits to you to own a rental property. Now, just like with anything else, rental real estate is actually a business. So we're not going to talk about whether it's profitable or not. We're going to talk about what are the tax deductions that you can take to save on the income that you're receiving as a rental real estate owner. Now, of course, to begin with, your rental income, all of it has to be reported as income on your rental property. And that does not just include the rental income. So it's not just the rent that they pay you on a monthly basis. It also covers advance rent. For example, if they're paying you for the first and last month rent, then you have to report that as income as well. You also have to report security deposits. If you receive it and you're probably going to use it for repair and maintenance, then that security deposit to you is income as well. If you decide to refund that security deposit, then you don't have to include it in your rental income. If, for example, you only use portion of that security deposit for repairs and whatnot, then yes, you'll have to include part of it, whatever you kept as income to you, and whatever you refunded, that's not income. Also, there are payments for lease cancellations, for pets, for all kinds of different, for washer and dryer, for anything like that, including in your rental property, then you have to include that income as well to you. Now, let's go to the brighter side of it, which basically you have a lot of expenses, and at the same time, pretty much all the expenses are tax deductible. And I'll walk you through what are these expenses and how can you deduct it. There are so many deductions that you can take as a rental real estate owner, but let me break it down to just 5 main categories, and that's going to cover a lot of the expenses. Number 1 is the largest one, which is mortgage interest. Mortgage interest, it's tax deductible to you because it's a business expense. Now, unlike your personal residence where you have to claim that on a Schedule A and you have to meet a certain threshold, it has to go above your standard deduction in order for you to take that deduction. With rental real estate, you don't have to do that. It's basically a dollar for dollar deduction, interest expense against your rental income. So it's critical for you to keep track of these forms that you received, whether it's 1098 form or whatever, how they're sending you these statements that you have, how much interest you have paid throughout the year as a mortgage interest on the rental property. Then keep it for your record, because that's going to be reported and deducted for you as a business expense. Now, the second large deduction is property taxes. Now, the property tax is tax on the real estate that you own and sometimes other properties that you own as well. The amount of taxes just depends on the property value and where it's located. Now, pretty much the same concept as the mortgage interest. If this expense does not meet a certain threshold for your personal taxes, you're probably not going to qualify to take that deduction. But for your rental property, since it's a business expense, then yes, you can take that deduction dollar for dollar against your rental income. Now, the third largest deduction is depreciation. That's probably by far the largest deduction that you can take on a rental property. And depreciation basically means whatever asset that you purchase, whether it's a building or a property or whatever the case might be, it's going to go down in value over the years. And that's called depreciation. And the tax code allows you to deduct the depreciation on the residential rental property over 27.5 years. So if you own a rental real estate property, you can deduct that depreciation every single year on your tax return. Now, there are different ways to calculate depreciation, but if you have a good CPA that you're working with, then they'll know what to do at that time. But just make sure that you're aware of that, and at the same time, if you don't see it on your tax return, just bring it up to your CPA, because I have dealt with some clients that have converted from another CPA or another tax preparer, and they would come to me and I would look at their, Schedule E, for example, for the rental property, and I don't see any depreciation deduction. And when I ask the client, why are you not depreciating your rental property or whatever the case might be, they just don't know what to say, because that's not something that they are doing. It's just they're depending on the tax preparer or the CPA to do it for them. So just keep in mind that that deduction is available to you and that it should show up on your tax return. Now, the fourth deduction is repairs. Now, you'll have to do repairs on the property regardless how old or how new it is. Now, these repairs, whether you're changing a garbage disposal, whether you're changing a light bulb, whatever it is, all these expenses are tax deductible to you. Now keep in mind that repairs are not like upgrades. So for example, if you're doing a large upgrade where you're adding an additional bedroom, or you're remodeling your whole kitchen or your flooring or whatever the case might be, that's not a repair. That high price tag value is going to be added to your house basis, which is the price of the house, and it will be depreciated over time. But you cannot expense it the same year and just say this is repair. Now the fifth category is you have other expenses. Now just like with any other business, you'll have miscellaneous expenses. You'll have traveling, you'll have meals, you'll have office expenses, you'll have all kinds of different expenses. All these are tax deductible for you. Especially with rental properties, you'll have insurance, you'll have utilities, you'll have all kinds of stuff that you're paying, then those are tax deductible to you. Now, just like with anything else, when it comes to taxes, you have to document all these expenses. Keeping good records will help you monitor the rental property progress, and at the same time, will save you a lot of headache if you get audited in the future. Because that's the first thing that the IRS will look at is, do you have good records of all the expenses that you're claiming to be a business expense? Because if you are selected for an audit, the auditor is going to look at your tax return and pick out a few deductions and say, okay, prove to me that you actually purchased these things or you expensed it. And your role is going to be that you provide support in form of receipts, invoices, or whatever it is to show the IRS that you actually purchased these things. And at that time, if you don't have good records of receipts and invoices, then not only you're going to pay the taxes that you should have paid to begin with, but at the same time, you're going to pay so much in penalties and interest that financially it's not going to make sense. And nowadays, the invoices and the bills and the receipts are mostly electronic. So you can save them on your computer, and in case you get audited, you can retrieve them and just show them to the auditor. That is sufficient enough for the IRS to accept it. You don't have to have the paper receipt ready with you. So that's basically a summary of the major deductions that you can take as a rental real estate owner, and that shows you why it's so popular with all the millionaires and billionaires that they have rental real estate in their portfolio. That was it for today, guys. I hope that was helpful. Again, if you have any questions or any comments, feel free to reach out to me, and until next time.